What's up, money magnets? It's your Uncle Chartist, and I have to say today was a very nice trading day. 20 daily moving average was recaptured, and we closed just a little higher than the 5 daily moving average today. Both moving average were technically recaptured despite the beautiful move we had to the downside. It was very nice trading day, intraday. I had a 626 level that I was watching. That's this level right here. I wrote in my Discord, 626 is first resistance. If it clears, 628 and 630 plus in play. If 626 truly rejects, 624 must fail as support for bearish follow through and put 622, 620 and 618 in play. Now, when do I consider a level cleared? At the minimum, I use the 15-minute chart, and we can see that the first candle cleared 626, putting 628 and 630 in play, which I let my group know. Beautiful breakout of the 626 level, putting 628 in play first, then 630 if it clears. And boy, we cleared 628 on the next candle, and then we started melting up for the rest of the day, and we managed, like I mentioned, to recapture both important moving averages, the 20 and the 5. And I'm wondering, is a bottom in? As of right now, it's looking like the dip buyers came in and bought the dip, but a lot of times things can be deceiving. So yes, we were a bit overextended to the downside as far as the 5 daily moving average is concerned. So this bounce is actually pretty healthy. You guys can see the tendency. If I move the 20, you can see this, the 5 daily moving average. The tendency of the price action is that it never strays too far away from the 5 daily moving average. But when it does, and it does sometimes, it usually comes back to retest it. Many times this year as a support, but this time as a resistance. So we need to watch it very carefully, because the question is today a dead cat bounce or is a bottom in? The answer will be a dead cat bounce if 630 fails. Why do I say that? Because it will put price back below the 5 daily moving average. If it does break down 630 and break down 628, I will trust the rejection from the 5 daily moving average. This is a healthy back test of that moving average, and we should either head back to the previous low around 620 to the 618 area, or make a new low. That's usually how the down moves happen. They give us that beautiful leg down, a relief bounce, and then they give us that next beautiful leg down, which usually leads to lower lows. But we need to see the breakdown of 630 and 628. If that happens, we should enter puts. At least I will. However, if we manage to stay above the 5 daily moving average, stay above that Fibonacci level at 630, more upside can be had. The recapture of these levels and moving average would stay intact. Bullish follow through for tomorrow would be to clear 632.7 and 634. Doing that would not only keep the price above the 5 daily moving average, which is important to be bullish on a price action chart, but it would recapture those lost levels, putting new all-time highs in play. It's a good chance we'll break 640 on the next test. So we have the levels, we have the setups. Now it's on us to react to it unbiasedly. Now we move on to triple Q. Similar situation. It didn't quite fill the gap, but it did recapture the 20 daily moving average and the 5. Similar context, just levels are a bit different. I do have 566 and 569 as next resistant levels. If 566 clears, it's a good chance we go hit 569 and possibly send us to new all-time highs. But it would start with 566. I have a level at 567.5 as well. We need to see those levels clear and we can head up higher. If this is a dead cat bounce, we need to get back below the 5 daily moving average and also break down some fib levels. It recaptured the 563 today. So if it breaks down 563, that would put 560.3 back in play. If it breaks that fib level down, it'll send the price back below the 20 daily moving average, and a good chance that we are heading to a previous low, back down to 551-ish, or new lows, which will send us even lower than that. But we'll need to lose 563 and 560.3 as support. Otherwise, we clear 566 and 569, new all-time highs incoming. Here is Tesla. To me, it still looks overall bearish. It might be entering the contraction phase. Looks like an inverted cup, and it might be trying to develop some type of handle. But the context is that it closed right around my 309.3 fib level, and it still treated the 5 daily moving average as a resistance. So bulls have some work to do before we can fully get bullish once again again on Tesla. Staying above 309.3 and clearing 312 is a must. We clear those levels, we get back above the 5 daily moving moving average, and there's a good chance we head back up to 320 plus. But if we're below 309.3 and we start breaking down support levels, I have at 308, 305, and 303 new pivot levels. If we break down those levels, especially 303, Unco is bearish, and there's a great chance I would have higher confidence we head back below 300. Otherwise, above 309.3 and 312 is bounce time. NVDA already has or gotten its bounce time. Now this is a looking like a 3 candle bullish reversal pattern here. Big body red candle followed by a gap down, which ended up being a doji, and then we gapped up, broke the high of the doji, and head upwards. It's looking like a bullish reversal pattern. It did recapture that fib level around 179.6. I was watching the 180 level. If we stay above 180 tomorrow, we are heading to new all-time highs. Technically speaking, today's close was a new all-time high close. So above 180, we're gonna head up higher. 182 and 184 are my targets. If we are to pull back, 180 must fail. 177 also must fail. That'll get priced back below the 5 daily moving average. And if that level fails, I would be bearish in favor of a deeper pullback down to 169. It's a great chance we head down to 169, and bears would be in full control if that level is lost. Here is coin with an inside candle setup. The low of the mother candle's high is at 310.5. As of recording this, coin's around 317.8. So I do have support at 317, 315, 313.5, 312, 310.5, and 309 below. Watch those levels if they fail, especially that 310.5 level. Now, if we are to keep on heading to the upside, I do have resistance at 318.2, 320, 322, and 324. If those levels can clear, especially 324 being the critical one, Unco would be bullish at least up to 333.5 and maybe even 337.5. The mother candle's high is at 337.5, so if that level is cleared, it's a great chance we pop another $10 to $20 to the upside. It'll be pretty nice. IWM with the beautiful bounce, recapturing the 5 daily moving average, and it actually filled its gap. So if there is bullish follow through tomorrow, I need to see 220, 221.5 clear to put 224 and 226 back in play. If we are to be bearish tomorrow, I need to see 218, 216.5 fail as support. If those levels fail, this was not bullish. This is just a back test of the 5 daily moving average. 218 fails, I'll trust a rejection. We'll likely head down to previous low, down to 212, or maybe even lower. And last but certainly not least, here is the VIX. We need to watch the VIX carefully. It does measure volatility. It dropped today. Could be just a back test after the nice breakout it had from last week. We'll see tomorrow. Either way, 17.5 and 16 are support. If those levels fail, VIX is bearish. But if VIX is to bounce tomorrow, I need to see 18.6 and 20 clear as resistant. If those levels clear, we are popping back up. 21 and 22.5 plus are my targets. And guys, if you want volatility, you want the VIX to pop to the upside. And that's what I have for you guys today. I appreciate you guys so much for sticking around and sticking with me. I hope you guys found value in today's video, and don't ever forget that you are money magnets. Peace.